Are you tired of being denied loans or credit applications because of a low credit score? Or maybe you just want to improve your financial standing and have peace of mind knowing that you're on the right track. Whatever the case may be, improving your credit score can seem like a daunting task. But fear not. In this video, we'll give you 10 actionable ways to boost your credit score starting today. From managing debt to banking strategies, we've got you covered. So let's get started on the path towards better personal and business credit. Your credit score is a 3-digit number that reflects your financial behavior and history. It ranges from 300 to 850, with higher numbers indicating better creditworthiness. Lenders use this score as one of the main factors in deciding whether or not to approve you for loans or other types of credit. Several factors affect your credit score, including payment history, amount owed, length of credit history, new accounts opened and types of credit used. Late payments and high balances can negatively impact your score, while making payments on time and keeping balances low can help maintain or increase it. It's important to regularly monitor your personal and business credit scores through free services like Credit Karma or annualcreditreport.com. This way, you'll be aware of any changes in your score and can take action if necessary. Remember that building good credit takes time, so don't get discouraged if improvements aren't immediate. By practicing responsible financial habits consistently over time, you'll see long-term results reflected in an improved credit score. Personal credit is one of the most critical factors that lenders consider when deciding whether or not to approve your loan application. It reflects how trustworthy you are in repaying borrowed money, and it can either open doors or close them for future financial opportunities. To improve your personal credit score, start by paying all your bills on time. Late payments can significantly damage your score and make it more challenging to get approved for loans in the future. You should also maintain a low balance to limit ratio on any credit cards you have. Another way to improve your personal credit is to check for errors on your credit report regularly. Mistakes happen, and if there are any inaccuracies on your report, they could be negatively impacting your score without you knowing it. Avoid opening too many new lines of credit at once, as this can indicate a higher risk of defaulting on payments. Stick with what you need and only apply for new lines of credit when necessary. By focusing on improving personal credit through responsible borrowing practices like these, you'll increase the chances of being approved for loans and other financial opportunities down the road. When it comes to building business credit, the first step is separating your personal finances from your business finances. This means opening a separate bank account for your business and obtaining a federal tax ID number. Once you have taken these steps, you can start applying for credit in the name of your business. It's important to establish relationships with vendors and suppliers who report to credit bureaus. Making timely payments on these accounts will help build your business credit score over time. Another way to improve your business credit is by maintaining low balances on revolving lines of credit and paying them off consistently. This demonstrates responsible financial management and shows lenders that you are a trustworthy borrower. Remember that just like personal credit scores, there are no quick fixes when it comes to improving your business credit score. It takes time, effort, and responsible financial management practices to build strong credit in the name of your company. Building good business credit is an essential part of growing any successful company. By following these tips and staying committed to responsible financial practices, you can set yourself up for long-term success as a small business owner or entrepreneur. Debt is one of the biggest obstacles to achieving a good credit score. Whether it's student loans, credit card debt, or car payments, carrying too much debt can negatively impact your creditworthiness. One way to improve your credit score is to pay down your debts as quickly as possible. Start by making a list of all your outstanding balances and prioritize them based on their interest rates. Then, focus on paying off the highest interest rate balances first while still making minimum payments on the others. If you're struggling with high interest rate debt, consider consolidating it into one loan with a lower interest rate. This can help reduce monthly payments and make it easier to pay off over time. Another tip for reducing debt is to avoid taking out new loans or opening new lines of credit unless absolutely necessary. Each time you apply for new credit, it adds an inquiry to your report, which can temporarily lower your score. By staying focused on paying down existing debts and avoiding taking on new ones, you'll be well on your way towards improving your overall financial health and boosting that all-important credit score. Your credit score is a crucial factor that lenders consider when deciding whether or not to approve your loan application. A low credit score can make it difficult for you to get approved for loans and other financial products at favorable interest rates. Here are some tips on how to improve your credit score. Pay your bills on time. Late payments can have a significant negative impact on your credit score, so always pay your bills on time. Keep credit card balances low. Your credit utilization ratio, which is the amount of available credit you're using, should be under 30%. Check your credit reports regularly. Errors in your report can hurt your score, so check them regularly and dispute any inaccuracies with the relevant bureau. Don't close old accounts. Closing old accounts reduces the length of time you've been using them and lowers the average age of all accounts open in your name. Apply for new credit sparingly. Applying for too many new lines of credit within a short period puts you in unnecessary risk of overspending and defaulting on repayments. By following these tips consistently over time, you can raise your personal or business credit score significantly. This means tracking your income and expenses, limiting unnecessary spending, and prioritizing payments towards debts. Another important aspect of staying out of debt is avoiding high-interest loans or credit cards that can quickly spiral into unmanageable amounts. Instead, opt for low-interest options or consider alternatives like personal loans from friends or family members. In addition, it's important to resist the urge to constantly upgrade or purchase new items on credit. Learning to delay gratification and save up for purchases can help prevent impulsive spending habits that lead to debt. By prioritizing responsible financial habits like budgeting, avoiding high-interest loans, credit cards, delaying gratification in purchases, and staying organized with bill payments, you can successfully stay out of debt while improving your overall financial health.